Hey guys, welcome to DevTech Finance, and in this video we would be looking at the term loan to value. So let's understand. A loan to value ratio describes the amount of a loan one takes compared to the value of the property or asset securing the loan. So it is actually a financial ratio which is indicating that the loan amount which you are taking as compared to the value of the asset that you are purchasing. So this example would make it more clear. Assume you wanted to buy a home which is worth rupees 10 lakh. Now you are ready to make the down payment of 3 lakh from your own capital, which is by your side, and 7 lakh rupees rest you would be requiring as loan to purchase that home. So this 7 lakh rupees is the loan value which the bank is offering to you, and the 10 lakh rupees is total purchase value of your home. And thus you can calculate the LTV ratio as 7 lakh divided by 10 lakh into 100, which would be coming as 70%. So your LTV would be 70%. And generally, most of the banks and financial institutions does not give you 100% of the value of asset which you want to require loan for. They generally provide you between 70 to 85%. So thank you for watching. Like this video, share and do subscribe to my channel DevTech Finance. Thank you.